Welcome to Idea to IPO. My name is Rob. I organize Idea to IPO. We've been holding events in Silicon Valley for many, many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 1 million members among all our meetup groups all around the world. We've organized, promoted, and produced over 5,700 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. Thank you for all your support. We organize venture capital panels, legal workshops, networking events, and more. We hold events every day of the week. Check out our schedule at ideatoipo.com. Did I mention that we launched officially on February 1st, 2010? Anyway, what day is today? Yeah, I know, it's February 26th, but February 1st was our 16th anniversary, because this is 2020, 16 years. I know I mentioned this last month, but I want to keep milking it. So anyway, we have a cake. By the way, who has a birthday in January, February, or March? Well, happy birthday. The cake's for you too. So, our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant. Stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem that attracts people from all over the world who come here to do great things. It's not originally from Silicon Valley or the greater San Francisco Bay Area. Who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? Oh, 5 of you. Well, that's a record. Actually, who here was born in Palo Alto? There it is. Let's hear it for the native Palo Alton. Oh, welcome. So whether you were born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important though, because we know many entrepreneurs are struggling financially. So we make sure our events are free or affordable. And if one of our events has a cover charge and you cannot afford the cover charge for whatever reason, come talk to me and we can work something out. And at most of our in-person speaker events, we make sure that we provide a delicious buffet. Is that a delicious buffet? Come on, is that a delicious buffet? I want to thank Snell and Wilmer for sponsoring that delicious buffet. So let's hear it for Snell and Wilmer. More importantly, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Besides this young lady? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. Tonight, we're grateful to Snell and Wilmer for hosting us once again at this beautiful venue. Is this a beautiful venue? So let's hear it for Snell and Wilmer. We've held many events here. We look forward to many, many more. Roger, would you like to say a few words?
Absolutely. How you all doing? Excellent. Welcome, everybody. So excited to have you all here in such an amazing panel. Just a few words about Snell to pay for dinner. Snell is about 100 years old, almost 600 lawyers and 18 offices across the country. I head up our emerging growth and venture capital practice group, so I deal with startups from inception all the way through the life cycle, usually multiple rounds of funding. Most often, M&A is the exit, occasionally an IPO. Just on your seat, you may have found a couple of flyers. The event next week is for any founder in the audience that either is planning on taking money from foreign investors or that hires foreign nationals, whether they're in the US or outside of the US. There are so many regulatory pitfalls that you really need to know. And I get this over and over again in due diligence. So I asked a couple of folks from our office to come down and just basically, tell entrepreneurs all the things they need to know about CFIUS and export controls, because it is something that can really sink your startup. And then the week after that is a funding strategy workshop. I do this with all of my clients. We sit down and actively develop a funding strategy, which I found in my startup that I did. My biggest mistake was not having a startup a funding strategy. So I encourage you to please join us for those events. And yeah, that's it.
Some of our other partners are here tonight. I would also like to have them say a few words. Let's hear it for Ken and Cordify. Applause.
Hello and good evening, everyone. My name is Ken. I'm co-founder of Cordify. Cordify is a software services company. We work with startups right from ideation to MVP, and then once they get their funding, we help them grow overseas in offshore development in offshore centers. So we have programs like the Operate Transfer model and the Global Competency Center models, which helps startups scale very fast once they decide to go offshore. So whatever stage you're in, and if you want to talk to us about the ideation to MVP or the growth stage, please come and talk to us. Thank you.
Next up, we have Colin and Human Longevity. Applause.
Hi, everyone. Thanks for having me be a part of this event. It's exciting. I'm with Human Longevity. We do early detection and preventative medicine screenings for executives or anyone who takes their health seriously. And I'd love to talk to you more about what that is in detail over at the booth. But I will just say this, that in a room full of VCs and entrepreneurials, I know that we all think about the long term. And my ask and our ask at Human Longevity is that you think about what your most valuable asset is. And we believe that that is your health. And so that's what we are here to provide a platform for you to invest in. So with that, hope to talk to you tonight at some point.
All right, let's hear it for Ethan and Silicon Valley Innovation Group. Applause.
Hi, everybody. Today I'm going to talk about Eileen. This is artificial intelligence. Right now, automotive companies, they choose what they want to do, whether they want to do a hydrogen car, gas car, electric car, and companies doing AI are the same. They're all going for LLMs, but the problems with these generative AI is that they are hallucinating, there's moral issues, and they're next word predictors. Eileen emulates the brain. It has cortexes for math, sensors, speech, and others, and it's the way to AGI. Thank you.
All right, let's hear it for Jacqueline and Neural. Applause.
Hi, my name is Jacqueline McMillan. I'm a founder of Neural Method. We are a authority control plane that sits across AI agents, models, and tools. It basically governs risk, cost, and delegates. So if you'd like to talk to me more about it, and if anyone is using internal agents within their company or organization, please come speak with me over there. Thank you.
All right, next up we have Jimena with the Finance Club at Menlo College. Applause.
Hello, I'm president of the Investing Club, Menlo College. We're looking for speakers and founders for events, so after the panel, you can come talk to me.
Next up we have Dave and Well Made. Applause.
Hello, I'm David Ng from WellMade. So we build and design ADUs, sheds, and saunas, and homes. So you have any questions around that? We build them and we prefab them. So we build it faster and better and higher quality than what our competitors and people who just build stuff from sticks. Come by and take a look.
All right, next up we have Rishi and Impact Edge. Applause.
Thanks, Rob. I'm Rishikesh, advisor for Impact Edge AI. We turn your headache of sustainability reporting into profit-making engine. We have a blockchain and agentic AI platform that takes all that scattered ESG data and converts into concrete financial metrics with which you can generate profits. That's why our CEOs, CXOs love us, and we have 7 pilots, and we are looking for funding, $500,000, and more customers. Thank you.
So we have Azamat and Startup House. Applause.
Hi everyone, Azmat here. We are Olive Startup Houses. We are houses, communities living across Bay Area in large, nice properties. We have houses in Menlo Park. We have houses in Palo Alto. These are the communities of tech founders, engineers, interns from big tech. So we try to focus on like-minded people who can benefit from living and working together. So if you're looking for a housing, affordable housing in Bay Area, starting from $40 per night, come see me. I have my banner over there. So thank you.
All right, last but not least, Paul from Cruise. Applause.
Thanks, Rob. Did anybody hear carpool tonight? Anyone? All right, we all spent way too much to get here. My name is Paul, the founder of Cruise. We're a carpool company. And if you didn't know, 80% of the emissions for an event like this comes from us driving to these. And I'm proud to be Rob's carpool partner in this. He runs the most sustainable events in the Bay Area. Let's hear it for Rob. So Cruise Carpool, we help people to save 40 to 100% of their time, money, energy, emissions, and make new friends on every ride. Anybody like you or I can give rides to anybody else. Waze Carpool from Google had 1 million rides a month pre-COVID. They killed it. They moved to Waymo. We're bringing it back. And if you know anybody in any organizations like an employer or a university, please let me know. We'd love to work with them. Thank you.
To expand on that, 10% of global emissions are caused by in-person events. We do a lot of online events, but we do in-person events. So to mitigate the harm, we have a sustainability initiative. We have reusable plates, napkins, and mugs. So kindly, when you're done, put them in the proper bin. As I like to say, when it comes to sustainability, like many things in life, it's easy to talk the talk, but it's harder to walk the walk. And like many things in life, it's sometimes you got to do what you got to do, not because it's easy, but because it's hard. So guess who is going to wash all those dishes tomorrow at 8 a.m.? But who here is an advocate of sustainability? Well, I'm looking for volunteers to help me tomorrow at 8 a.m. to wash dishes, so come see me. I want to thank Snell and Wilmer, though, for allowing me to use the dishwashing machine up on the 6th floor. So let's hear it for Snell and Wilmer for supporting our sustainability initiatives. So though our local mission is to support entrepreneurs here in Silicon Valley, our global mission is to democratize entrepreneurship and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea to IPO. Check it out. We have tons of videos there, and this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. And our partner in this endeavor is Michael Payne, one of the top professional videographers in Silicon Valley. Let's hear it for Michael. Applause.
Hello, everyone. You're all come here for some kind of an edge, information. Maybe you want to leverage technology to further your goals. I apply video to that end. I help you tell your messages, tell your stories. And there's nothing like video to automize your messaging. It elevates your messaging and it elevates your brand. So if you want to take advantage of that, you can come talk to me, or you can get a hold of me through, well, me. Thank you.
All right. So let's see who's in the room tonight. Who here is an early stage entrepreneur? What's the difference between a pizza and an early stage entrepreneur? A pizza can feed a family of 4. Who here is an investor? Who here is an enterprise employee? Who's a government employee? Who's a former government employee? Who is a student or an academic? Who is a journalist or a media person? Who's here for the delicious buffet? Well, thank you for coming. So here's the schedule for the rest of the evening. Our panel will hold a brilliant, compelling, dynamic, entertaining, and scintillating discussion. Right, panel? At 8:10, we'll open up to questions from the audience. We'll wrap it up at about 8:40 p.m. We have our raffle drawing. We have tons of prizes that are pretty exciting, so you must be present to win. You can stick around, network, socialize, connect. There will be an after party. More on that later. So without further ado, I'm going to hand it off to our distinguished moderator. That's you, Roger. Roger Rappaport, partner at Snell & Wilmer. So let's give it up for Roger and our panel. Applause.
All right, great. So what I'd like to do is just quickly go down the panel. If you could just introduce yourself, tell us a little bit about you, a little bit about the fund, what you invest in, check size, whether you lead or follow. And let's try and keep it brief because there's so much stuff that we want to cover. So let's keep it a little bit brief.
I'm Anshu Agarwal. I'm actually a founder turned investor. I had my own startup company, and the firm that invested in me, when I was leaving the acquirer after paying my dues, they asked me to join the firm. So I'm at Converge, which is a Boston-based firm. I'm the West Coast partner. And I invest only in early stage, so pre-seed, seed, and sometimes Series A. Invest in AI infra, AI native application layer, and a little bit of robotics. Check size is somewhere between 250K to 2 million. We do lead, we follow on, and we invest in all stages in the company that we have invested in.
Great, thank you. Next up, Terry Lee, Lamb Capital.
All right. Yeah, great to meet you, everyone. My name's Terry. I'm an investor at Lamb Capital. We are a corporate VC firm. So our corporate parent is Lamb Research, which is a Fremont-based company in the semiconductor equipment industry. So we sell large-scale capital equipment to the TSMCs of the world to manufacture cutting-edge computer chips. In terms of our investment, we're primarily early stage focused, so looking at anywhere between 1 to 5 million in initial check size, and we invest with a pretty strong strategic focus, looking at relevant technologies and innovations in semiconductor, advanced manufacturing, robotics, material sciences. So primarily looking at the hardware side.
All right, next up, Geet King Zed, Omece Venture Studios.
Thanks, Roger. Hi, everyone. My name is Navgeet King Zed. I go by my middle name, King. That either says something about my ego or my parents' ambitions, probably a little bit of both. So I run Omece Venture Studios, and it's a venture studio that's based around one philosophy: profits rooted in purpose. We don't just write checks and say goodbye. We also co-build and provide founders who are making the world measurably better with durable support so they can build durable businesses. We focus, like I said, on profits rooted in purpose businesses where business and doing well and doing good are not in conflict. They're the same thing. We're most active up to Series A. So idea, pre-seed, seed, all the way up to Series A, with our check sizes going up to 250K. And at the core of our investments, we ask, can the founder build something that generates serious returns and make a structural dent in a real problem?
All
if
right,
that interests you, come talk to me.
Thank you. All right, next up, Maria Pienaar, who is the operating partner at Unicorn Growth Capital.
Hello. We invest in embedded finance fintech companies, specifically initial focus in Africa. A lot of stablecoin infrastructure. So if you are playing in the embedded finance fintech space, I would love to hear from you. We invest pre-seed through Series A. Typical check sizes anywhere from 50,000 to about 250,000. And currently, we're also looking at companies with payments infrastructure. If you're processing anywhere between $500 million to $1 billion worth of transactions, that may be a stablecoin based, definitely want to hear from you.
All right. Next up, Sanjit Dang, co-founder and chairman of UFirst Capital.
Hi, everybody. My name is Sanjit Singh Dang. I've been in the Valley for more than 20 years. I used to be at Intel Capital, where I did investments in cloud, big data, and AI, whatever AI was at that time. I now run UFirst Capital, under which We invest in AI up and down the stack, and as well as cybersecurity and some deep tech sectors as well. The kind of companies we've invested in, we did Anthropic early enough at the 18 billion round, and then subsequently since then as well. We did Perplexity when it was at Series C round as well, 3 billion valuation. So those are little growth stage investments, relatively speaking, for us. We also do seed Series A. The check size is typically on the low end, 500,000. We have done up to 5 million in seed as well. We're closing a couple of seed deals right now in that range.
All righty. Next up, Paul Russo, Chairman and CEO of K2X Technology and Life Sciences.
Hi. Yeah, we go by K2X Capital. So I'm a former techie. I started 3 semiconductor companies. Some went public, some were acquired. But let me ask a question here. How many of you are investors in startups? Okay. How many of you have been investing at least 10 years? Okay. How many of you have been investing at least 20 years? How many of you have been investing 30 years? Me. So
when he was 15.
So 8 years ago, when I stopped being a chip company CEO, I joined the Band of Angels, and I started saying, startups have gone globally. You have startups now in Africa, in the Middle East, Brazil. That means the world's more aware of startups. But the world can't invest in startups if they're not accredited. So I said, let's create a vehicle that's going to allow the proverbial kid in Africa to safely invest in startups. All my angel friends laughed at us, but we said, let's figure it out. And we have. The essential things are how you decide what to invest in. And the second thing is you have to go public. Because once you're public, then everybody can go buy your shares and own pieces of 100 startups. So we developed a double vetting system. We don't lead deals. We're global, US, Canada, Israel, India, life science and tech. Everything's vetted twice. First by lead investor, then by our own advisors. All of them were investors. We never take advice from someone who just pontificates and said, you should buy that stock. Well, why aren't you? So we're in the process of going public, and I'm sure you've all heard how Robinhood just announced a new fund that's going to be public that's full of startups. This statistical model of a public vehicle that's full of thoroughly vetted assets is going to grow more and more while VCs are going to shrink.
So, Paul, what is it that you're actually investing in?
We invest in anything, anywhere.
Okay.
We made 200 investments to validate the model. We've only written off 12% in 8 years, which the bankers find amazing. And this model, in fact, I was going to suggest to Rob, they should call these events not what's hot or not for VCs, but what's hot or not for startup investors, because you're seeing different models.
All right. Great. Thanks a lot. So let's just dive right into it. But before we look forward, let's just look back. And maybe you folks could just give us your thoughts in terms of what surprised you most about the venture market in 25. Anyone, jump on it.
I think what surprised me most was the barbell shape of the investments. So some companies were very, very highly valued, and some companies that were good value were very early stage, very, very early with very strong founder conviction. And a lot of companies in like Series B, Series C, they kind of were capital efficient. So that was the biggest surprise I found in 2025.
Becoming more and more of a bifurcated market?
That's right.
Yeah. Anyone else? Any thoughts, Maria?
Yeah, I mean, the one thing which I would say excites me most from last year is I've been looking at some of the life sciences industries as well a little bit, and seeing startups and just the speed at which developments are happening in life sciences, especially healthcare, medicine, how AI has enabled different drug discovery, bringing down the timeframes for that. That's quite inspiring. But yeah, you get a lot of just the wellness. I think there's still a lot of noise out there, which is not really sustainable. But I'm quite excited, especially on the life sciences side,
we think
There's
so good.
incredible opportunities for AI, really getting incredible valuations there.
Yeah, finally, the US caught up to this thing called stablecoin infrastructure. So makes me
excited you-
makes me excited about how Africa was leading that one.
Sanjit?
The rise of AI is evident and not surprising, but software replacing software as the first use case of AI was not expected. But in hindsight, it makes sense. But I think that was surprising as the first use case. Then the other thing that has been surprising is the pace at which the call them the even Fortune 30 companies are getting disrupted. I think you're going to start to see the next Fortune 30 change pretty quickly next 2 years.
Yeah, I would definitely want to get to that because that's a hot topic of discussion this last week. How about for you, Paul?
Well, I'm probably the only one that's been investing for 3 decades and has seen the dot-com crash, and I'm seeing the same movie again. Back then, the bankers would call you and say, the internet's going to change the world. Look at all these startups, The female athlete.com's worth at least $5 million for the name. So, of course, after my first company public, luckily it went well. It was the hottest stock on NASDAQ in 98. I invested a couple of million in all these hot internet startups. Well, guess what? I got zero back. And I think we're going to see the same movie. People say, look at this AI company. Revenues went from 0 to 50 million in 6 months. Well, they can go down just as fast because it's a fast-moving world. So my concern here is that we're entering a similar environment as we had, and people are concentrating on AI. They're not looking at life sciences. Look at all the dynamics. People are getting older. People pay for great health care. So we're about 70% life science. Okay, too late. I finished talking.
You had some thoughts, Terry?
Yeah, sure. So yeah, as Paul and other folks and even the entire market as a whole, I think has seen, right, a big question that looms over our heads is, is there maybe too much hype in the market? What exactly are the near-term deliverables that AI can really truly create? And that's been an interesting trend that we've seen as well, I think, especially with companies that have, clearly very strong teams, very strong technical foundations and backgrounds, but with thus far relatively little to show for in commercialization. And at that same time, being able to raise staggering amounts of capital at even more staggering amounts of valuation, right? And I think that, especially within some of the themes that we've looked at, some of the sectors that we've looked at, in deep tech, in physical AI, for example, that's been an interesting prevalent trend.
All right. So from an investor's perspective, are you planning for a more founder-friendly, a more investor-friendly 2026, or is it going to be this bifurcated, situation for founders? If you're AI native company, you've got traction, you're going to demand significant valuations, and if you're I don't know, maybe a SaaS company, not so much. What's the thought here in terms of founder-friendly versus VC-friendly for 26?
We have been modeling how long this current AI wave, call it the founder-friendly wave, will last. The high valuation wave, you're probably roughly around another 6 months. That's where we are modeling it at. In fall 2026, we do expect there will be a cool down. It won't be an AI recession, but there will be a cool down, and you will start companies getting cut out.
So is that a cool down generally or specific?
AI cool down in the private sector, valuations coming down, and then the whole narrative will shift from, hey, my valuation went 3x to my valuation was cut down only by 30%.
To add on to that point, do you think it's going to be harder? There have been a lot of seed companies that have got funding. When this pullback happens, is it going to be harder for seed companies to raise a Series A?
Totally. I think if I'm a founder, I would raise as much capital as I need to in the next 3 to 6 months, get the cash reserves. You're going to have a hard time. It's coming. The wave is not going to last forever. Secondly, you have to start also bifurcating the AI stack into different parts. You have applications, you have LLM, you have middleware, you have infrastructure. Within infrastructure, there are whole layers as well, right? Some layers will still be hot. There is $10 trillion of AI infrastructure spending that has to happen in the next decade. Maybe even it'll get pulled in, maybe even sooner, to support all the entire AI adoption wave. Where is that money going towards? Compute and power, and then rest of the components. Compute has to be re-engineered. NVIDIA is here to stay, don't get me wrong. But you are going to see a periphery of chips, co-compute, co-processors, application, AI processor, you can call it. Google TPU is an example, etc., etc. So that's one wave, right? Then power. AMD is another one, right? Power. People are talking about power, but people have not put it as the centerpiece of the AI innovation curve. Power is going to get in. Power is actually the bottleneck. You don't have enough power in the country to support the AI data center. That's clear. So where will that come from? You can even build your own power center, generation center, but still that's not enough. So you need innovation, right? So those are waves that will stay forever.
According to the president the other night, they have to build
their own that. No, Google already started. They bought a power generation company, if you follow the news, right? They have to do it. But I think even that is not enough. You actually need innovation in power.
Yeah, no, I think that's definitely going to be a very hot area.
Yeah, I think the top 10% with great AI talent, research talent, top 10% of the company are still very extremely founder friendly. And then there is a selective investor friendly, I would say, environment for us, because there are lots and lots of companies being formed, and not the entire market is founder friendly, but there is this very selective 10%, which is extremely founder friendly.
Yeah. All right, let's move on.
Let me just add a comment.
Yeah.
Because we have 100 portfolio companies. It is definitely an investor's world because there have been no exits. In fact, I've been to at least a dozen events this calendar year where their VCs were talking. Of course, they all talk about only AI as if that's the only industry, but they're all moaning about lack of liquidity. Actually, what people don't realize, this model that Robinhood is doing or we're doing, once we're public, we can ease that because we can acquire a whole angel fund with public company shares and grow AUM and give people liquidity. We can buy an individual company that a VC wants to get out of for public company shares, but it's definitely a buyer's world.
So just putting AI aside, if we could put AI aside for 1 minute, where do you think venture allocation is going in 26 besides the obvious, which is AI native companies?
Definitely. I mean, fintech is still a strong category for growth, especially with stablecoin infrastructures. I don't think digital crypto distributed ledger is going away. That you likely will see more of that. And then I think life sciences has been hammered too much. There's definitely a lot of exciting things. So I think we'll see a little bit more of that coming up.
I'm seeing a lot of activity, defense tech, robotics as well. You guys seeing that too in terms of companies coming to you?
Yeah, absolutely. I think, that's a really good point that you bring up, Roger. I think, of course, number one, the most prevalent thing that we're really seeing among a lot of the startups, and perhaps what's closest to many consumers and us as individuals, is the application level AI use cases. But beyond that, and looking into kind of the foundational technology behind that AI, for instance, that's actually very relevant to some of the themes that we at Lam we look at as well. So actively looking into, for example, compute infrastructure. We mentioned advanced processors, AI chips, even to the realms of quantum compute, for example, these advanced deep tech themes that will be really supporting that next revolution of AI applications. So that's definitely something that's very, very much within our crosshairs, physical AI and robotics as well. Number one, thinking about how to better automate some of our own internal processes and how to, enable robots to perform superior, more precise, and more repeatable, faster iterations at microscopic scale, and that's kind of very relevant to what we work on in the semiconductor fabrication industry, for example. So high precision instruments, high technical performance, high requirements. So these are a lot of the themes that we're really actively exploring. We're actually Lamb Capital is actually hosting our own event in a couple months, so I have to give a shameless plug there. So looking at deep tech. But yeah, very fun times, I'd say, for that foundational technology.
All right.
I was just going to add to that. Yeah, to your point about, I'm also noticing, of course, defense tech, but AI infrastructure and tooling, a lot of money going there, climate tech, healthcare AI. Those are some of the things that I'm seeing just become hotter and hotter. But at Omece, what we get kind of excited about is the intersectionality, like AI and climate, AI and fintech, AI and health equity, and where purpose and profit naturally align.
All right. So something I've been wanting to talk to you folks about, because it seems like this has been sort of somewhat of a shift in thinking. 6 months ago, people were talking about AI eating the world, and the last few weeks they've been talking about AI eating software. Has anyone heard of the Citrine report? It's a report that went incredibly viral, and I don't know if you folks have had an opportunity to look at it, but essentially they sort of posited that, like, in June of 2028, AI is going to have disrupted so many things, white-collar jobs. There was going to be over 10% unemployment. Dow was going to be down 38% because so many people were going to be unemployed. There wasn't going to be, the GDP was going to be down, sort of this real doomsday scenario. And what was really interesting is it moved the markets. It moved the market significantly for companies like Salesforce, Zscaler, that were down very significantly. So for folks that are building traditional SaaS companies that are selling seats, how is AI going to change the model? Whether it's building, whether it's pricing, this for folks that are just doing a usual, typical SaaS that don't really have an AI vector, are they fundable?
I think I think the SaaS company, there's so much talk about this already, but there are two levels of disruption happening. One is at the product level, second is at the business model level. At a business model level, if I'm a customer, today you are selling, SaaS company is selling on a per seat basis. And at times they are selling, let's say, 5,000 licenses to all my sales guys or to all my HR guys or design guys, etc. Tomorrow, as a customer, I can say, just give me one license. My agent will interact with your SaaS tool, SaaS/AI tool, and all my employees will talk to that. And I may even cut down my employee force by 50%. So I may have less employees to start with. So what I go from, so as a SaaS company, I go from selling, let's say, 5,000 licenses to one.
Yeah.
Right? Overnight.
Yeah, and that's why these companies like Salesforce, Intuit, Zscaler got hit so badly.
And at a product level, all I have against the AI companies is to say, I control the workflow, I control the distribution, I have the customer data, I have the context. Those are the 5 things I can claim as a SaaS company I have. It's going downhill very fast.
So what do you say to folks in the audience that are building a SaaS company today? So if you're a VC investing and they say, our pricing model is outcome based, or it's usage based, or it's a hybrid model. And I'm
Open
grappling
based.
with this with clients.
I have some, I think, comments there as well on, yeah, theoretically, I agree, you will see this definitely happening. But for SaaS companies or companies that's building software as a service, it's about growth and margin durability. So that's what you will have to prove. Now, I am not convinced. I mean, if you're looking at enterprise sales and your customers, any company, the CFO still think OPEX and CAPEX. Now, yes, they will likely put more pressure on, okay, I don't need all the seats and things, but there likely will be some price corrections in, again, you still have to fit in with how CFOs measure results. I am not completely convinced. Everyone says ARR is dead, everything is going to be tokenized. Show me one CFO in a buyer that likes to have fluffy, highly variable cost spent on anything, whether it's a token or software. But definitely it will likely bring back to set license fees in those cases.
I think that report that you were talking about, it was supposed to be a work of fiction, but it resulted in market movement. It really
crazy.
It was crazy. Yes, I don't think SaaS is unfundable. I think SaaS is fundable. There has to be fundamental changes in product and pricing. Seat-based pricing is also not dead. One of the reasons why Salesforce, Workday, and all these companies saw a drop was because if the number of employees are going to reduce, the number of seats are going to reduce, which is going to reduce the revenue. So there is going to be... So some changes in the pricing have to happen. I mean, it's inevitable. It has to be tied, whether all the seat-based pricing converts into outcome-based pricing, I don't think we can go that far. I think there's going to be a hybrid model of certain sort. And it can't be just software. It has to be a service as software. Okay, not software as a service, but service as software. So there is automation built in. So you're not looking at a dashboard, but you are actually somebody's working magically inside and giving you the results. So it's an outcome-based IPO.
So for the folks that are building software companies out there, do they have a fundable business if they don't have a robust AI vector that they can articulate, which is how they're going to, accelerate revenue, expand margins, or strengthen defensibility? If they don't have that, is it a fundable company?
If the traditional big SaaS companies are finding their business model challenging, you cannot, as a startup founder, use the same business model to pitch to VCs today. That's not going to work. So you have to start thinking of what is the futuristic business model first, right? You have to start thinking of, am I going to charge token-based pricing? Am I going to charge usage, some other form of usage, et cetera, et cetera? The traditional model, nobody will believe your financial projections based on those traditional business models. Second thing is, before you even talk about the business model part, the product itself, SaaS as the interface may not go away. The user is going away. Who is using SaaS as the interface will stick around. GPT is a SaaS tool as well. But SaaS as the user using the SaaS is changing. Pretty soon, we're going to see, it's early days, so you're not seeing any plots of those, but we're trying to model today in an organization, if there are 1,000 humans using the SaaS tool for, 2 hours a day, you're going to start to see agents creeping into that plot, maybe 5%, and then every year it goes up. And in 3 years from now, you're going to have maybe a tipping point between humans and agents.
Yeah.
At some point, agents will overtake the human usage. So now, as a startup founder, bringing it back to Roger's question, as a startup founder, you are building a SaaS or an AI company, you're not selling to humans anymore, you're selling to agents. So now what is your pricing model? What does your product look like? And keep in mind, agents don't talk in English. They don't have to. That's a human problem. That's a human limitation. So there are a lot of such fundamental questions you can start asking. How do I design the product? What is the right product? They can talk in zeros and ones only, agents.
Yeah. As I'm looking at clients' decks and advising them, when we're going out funding, I'm saying, answer the question how you're not going to be disrupted by an AI agent.
And also, I should mention, if you're building a startup that ChatGPT's next release can disrupt in a weekend, then there you go.
Well, wrapper companies aren't fundable anymore, are they?
Correct. And that's why I was alluding earlier to, within AI, you're going to start to see a slowdown. I think you're going to first start to see a slowdown at an application level. Anthropic is coming. Anthropic and OpenAI, they're coming hard at that level. It's tougher for them to start disrupting the AI infrastructure startups, going after the new compute, the new power, the new memory, etc., etc. That's going to be a later wave.
But it's so interesting how one company can cause such disruption. They came out with the security bolt-on, and then all of a sudden public security stocks, took a massive hit. And then the next thing, to it is doing a deal with Anthropic, doing a partnership. I mean, it's phenomenal.
We have been lucky to be relatively early investors in Anthropic, but I mean, we're trying to see projections. We were actually at the office of one of the big VCs who has a significant stake in Anthropic, and they said, when we were asking them, if it goes IPO, are you looking at $1 trillion market cap? He said, no. We're looking at $2 to $3 trillion market cap. I was like, wow, easy. When I even have a surprise. Now they may be big optimistic. They are also significant investors in the company. So you can take that with a grain of salt. But to your point about the cyber industry getting potentially disrupted, it's still early days, right here. But the potential is huge.
I think investors today are, it's ready, shoot, aim, in the public markets. Yeah.
So I think we have seen this movie before. I did a company in serverless infrastructure, and AWS, I used to really, really dread about AWS reInvent. Okay, because they'll go on stage and a lot of companies would be killed that day because they are doing this and that and 10,000 services. But eventually there are pure play companies that do well. Okay, so yeah, Anthropic comes out with a cybersecurity stuff. I don't think Palo Alto Networks or Zscaler or any of these companies are sure. They will have to evolve, no doubt about it. They cannot say that we are adding AI. No, they have to become AI native from within. And do something new that the AI has to be AI is horizontal. It cannot be a feature. It is part of the fabric. And that change has to happen in traditional companies, whether it's a SaaS company or a cyber company or any of those. But it's not going to, they're not going to be going away. That at least I believe in that. Because AWS didn't kill every single company. The giants are still there.
Yeah. So just to switch gears just a little bit, what do you think will truly differentiate AI startups in 26 that can raise money from those that can't? Is it this AI vector?
I think a really interesting question along the vein of what folks have been talking about is, moving forward, you cannot build a startup solely on the foundation of, okay, we use AI. Because that's going to be a default tool that everybody is expected to be tapping into in the same way that maybe we are now using websites and computers and everything along those lines. What really will differentiate, in my opinion, for example, is looking at folks that really have the execution and the domain expertise to be able to not only know, okay, I can tweak and tune and build specific applications on top of these widely prevalent and increasingly more and more commoditized foundational models that's available to all of us, but really being able to curate the technology and build a customer experience around fundamentally what are the core pain points and the issues that customers will actually be expecting to solve.
This kind of ties your last question and this question together, but AI, when I think about AI, it's starting to look a little like electricity. In a few years, it will be a foundation. It's an expectation of what you are. It'll be the foundation layer of whatever you're building, whatever you're using it for. It's not. So the question will start to become not what's your moat today, not what differentiates you today. When I'm talking to entrepreneurs, when I'm looking at pitch decks and what have you, I'm looking at the question that I'm trying to answer is what's going to be harder to copy in 24 months from now? What's going to set you apart 2 years from now, 3 years from now, not just right now? So, when we're talking about moats, do you have a data moat? Do you have like a workflow integration moat? What's setting you apart? What's going to be harder to copy? Do you have a network effect? Do you have a distribution moat? What's going to be harder in 2 years from now that you don't already have?
One more point. I think everything was covered, but I think unit economics is going to will be very important. Lots of companies are not looking, they're just producing, they're generating revenue based on credit that they have from hyperscalers and everyone. I think unit economics would be very, very important coming, especially this year, starting this year.
So let's just flesh that out a little bit. To be fundable at the seed stage or the Series A stage, what are you folks looking for? What are the must-haves for a company at the seed and the A for you to invest?
So I invest early, and there are literally everybody can show the TAM and everything to be very big. It doesn't mean much. What really matters is the founder credibility. Okay, the team becomes really important because there's going to be lots of changes. There may be incremental changes, there may be pivots, and only a very good founder who knows how to navigate through those changes can take it forward. I really believe team is essential and even more important these days than it was before. The second thing that we look at is because it's very hard to judge a tech moat. If there's a tech moat, it's very apparent. Like, these guys have come up with a new technology that enhances the GPU utilization. That makes them very valuable. But it's not easily evident what's really novel in the technology. But what we look at is there a data layer that is very that's unique to them. And if there is, then there isn't. Then there is domain expertise that they might have. So somebody might use Anthropic for doing, but they still need domain expertise to do the workflow. So these are some of the other moats that we look at, and distribution moat is a very important moat in this day and age. So go-to-market becomes even more important when you can't find a technical moat.
But just at the, for the panel, at the early stage, what are the must-haves at the seed? Team. Okay, that's it. And then
the most important thing is traction. As someone who's a potential customer is willing to talk to you and express interest that if your product works, they might use it.
Yeah, I mean,
that's to me.
Even at the seed stage where you're pre-revenue, that's often the chicken and the egg, right?
Some seeds have pretty good revenue, so I wouldn't say a seed doesn't have revenue.
It's a bit of an amorphous term, because you see seeds at $40 million raise.
But again, it's so the team is definitely important and traction, but it's to show the validation points of how they're going to drive both durability and growth and margin in a very disruptive environment. And that comes back to the team and how they're going to navigate that. So we also look at those specific areas. Interestingly, in especially African fintech, so Africa was, in my view, leading the whole blockchain and adoption of stablecoin infrastructure pretty much up to this point. But the one part that's completely missing in that area now is the AI vectors for companies and skill sets. So we are now starting to look at companies, if they don't have a strong AI vector, starting to get their hands around this, they become unfundable. But understanding how to apply it to start driving value for customers, at the end of the day, it's still the value in understanding the customer market.
You know, as a seed start founder, you're not pitching to the VC's brain, you're pitching to the VC's heart. You don't have data, you don't have sales data, you don't have metrics, you don't have all the customers lined up. You may have some initial, what you call paying customers, and what you call MRR and hence ARR. It's not recurring. Come on, it's experimental, it's ERR. So at that time, all you're doing is pitching your vision, pitching the story to the investor's heart. That's how you should. You know, one of the things we do, I do is I'm not a fan of nice pitch decks, right? So if I like a pitch in the first 10 minutes, I shut down the projector. I say, let's do a whiteboarding session. Let's have a conversation. Because I really want to understand, and I'm not an expert in the area that the founder is pitching in or the founder is building the startup in, right? I may know some things. I'm also trying to learn from the founder, but at least through a whiteboarding session, I can have a conversation and I can get to a point within 30 minutes whether this founder has gone deep in that area or not. But by sometimes I may bring up, I have seen this XYZ startup. What do you think of that? Is that a competitor? He says, no, this is not a competitor, and here's why. So you got to spend the time not just on the pitch deck, but also on really understanding in depth what that sector is, who the payer is, what is the persona, who is going to buy, what feature set, are you a platform, how do you become a platform if you're not. There's so many things for you to think about, even at a seed stage. Go deep.
You know, it sounds like team, obviously the early stage is really, really important. Are there any characteristics of founders that when you see them, you really want to lean in? And, you know, on the flip side, certain characteristics that you see just make you want to kind of run.
Dogmatic. Yeah, sometimes that's all what counts. Dogmatic. The second thing is, you know, like I mentioned, you know, we think, we may be wrong, but we think in 6 months we're going to start to see us slow down, right? At that point, all that matters is, can you raise cash? Can you still raise funding in that environment? Or most startups don't die out of, I don't have a good team or I don't have a good product. Yeah, you do. You have all the experience, you have all the expertise, etc. You just run out of money. It's plain and simple.
So with Omece, we are since we're looking at profits rooted in purpose, what makes me lean in is when the founder is solving something that they've actually lived, and they have a deep lived experience, and they are building from expertise. That always makes me want to lean in, and because there's a lot of problems that can be solved for, but unless there's that deep conviction and passion, I have not found a founder that can be successful in the long term.
So there has to be real founder market fit.
Exactly.
Yeah.
Yeah, I was going to say, to codify it, it's either should be founder market fit or a product founder fit. Because you're far, far away from product market fit. So those are the two things.
Humility.
I think, you know, when I invest, if someone's a great storyteller, I think that is such an incredible quality, because being a good storyteller means that you're going to be able to build a great team that's going to quit high-paying jobs, come into work for sweat, you know, tell a great story, you know, when you're funding. And, you know, it's not something that comes naturally to people.
Yeah. And able to go high and go low is really important for the founder.
All right, let's switch gears a little bit to talk about funding. What are the things that you think founders most often consistently underestimate when they go out doing their first round of funding?
I think the time it takes to raise money. A lot of founders, especially early on, they come and says, I want to close this round in 2 weeks. Okay. So that's number one thing I find founders don't understand, who have not raised money before.
And I think, I've got a client here, 2 weeks, $40 million, two safes, $20 million safes from two very high profiles of VCs. Founders hear that and they go, oh, I can do that. That is not the general. That is absolutely not the general.
I was going to say the timing is definitely the number one thing people underestimate by at least 5x. They're like, oh, I can do this in 2 to 3 weeks, but it's going to take you at least 5, maybe 10 times longer than that just to get to that point. But the number two thing that I always see is how big of an emotional toll this is going to take on you. So many founders end up taking it personally or take it as the validation on their character, and rather than just looking at it as not the right fit for the investor, they see it as a personal attack on them or a personal issue on them.
Just adding on the time it takes to raise money, it takes literally a founder 2 to 3 days out of running the business, and that can become quite an emotional toll. So really not underestimating that, but also making sure someone else in the team can focus on also the business aspects while one of the founders are looking at the fundraise side of things.
What do you think of go ahead, Terry.
Yeah, another, I guess, challenge or piece of feedback that I had in mind as well is, as a starting or first founder, always be aware, I think, of customizing and optimizing your story to target specific different individual investors. Each individual is different. Each person's background is different. If whether you're dealing with perhaps someone who has a more general focus and you need to really run through some of the depths of what's in your head and your experiences and how you've laid out the roadmap, or are you dealing with someone who's run that gauntlet before and is very familiar? You don't need to sit there and tell them what the size of the market is. They probably know it better than you, right? So that's another interesting piece of feedback, is just always be aware from one case to another and not be applying a standard mindset to everyone.
So what do you go ahead, Maria.
Yeah, I would just, coming back to the fundraise strategy, which I know is is what you also talk a lot about, is have a fundraise strategy, right? Don't just think this process is about. One of my pet peeves, and I'm sure a lot of us here, is meeting a founder and it's like next minute you're getting, oh, can you introduce us to someone? Well, we're not just going to introduce you to someone, and who's going to spend the time to figure out who's your specific target investors. So do your homework. Don't just say, we're very specific in our investment thesis, and I cannot tell you how many emails I get. Oh, we're this clean tech company. Oh, we're this type of company. It's like, I'm not even going to respond to that. Don't just do blanket outreach.
Yeah, I think that's where founders who have so little time make such a mistake in not optimizing for the investors that really fit within their sweet spot, whether it's check size, sector, or even someone they want to have. I just see so many people doing sort of the spray and pray, which is just never a good strategy. It wastes so much time. And the successful founders really are those that optimize, for the right investor in their space, writing the right check size, and then, drilling down to the venture partner they'd like to have, on their board. Just in terms of other mistakes that folks make, I really want the folks in the room to get some takeaways. What are the most common mistakes that you see in the fundraising process? And let's conflate another question, mistakes made in pitches.
Too much focus on product. We are not your customer. We want to see the nitty-gritty on how you're going to get your first $1 million revenue, how to get to the next $10 million, how to hopefully get to your next $100 million. So unclear value proposition is one of the biggest turnoff when I don't even know who the heck your customer is going through the pitch deck.
If you pitch to a VC for funding, you're making a mistake. Because if you pitch to a VC for funding, all you will get is advice. If you go to a VC looking for advice, you will get funding.
Yeah.
Do not go to VCs looking for funding. Turn the table. If I am a founder today, if I leave everything what I'm doing and I create a startup, I'm not going to go to VCs with a pitch deck and say, hey, sorry, I'm looking for my first $2 million of seed round. Can you help? I will get advice. And I'm wasting my time. I would rather go to VCs and say, I'm building this. Here is what I'm doing. You have so much experience. You invested in this company. You were early in this. You were this. I want to learn from you. Can I have 30 minutes of your conversation? Here is what I'm building. Here is my thinking. Tell me where I'm wrong. And if you are able to do that conversation with conviction, money is not the problem. Do not chase the money. There is ample money here. Billions we are seeing. Companies are raising tens of billions. So obviously, money is not the problem. So why are you trying to look for money? Look for, build credibility, show conviction, get advice, make them as your pseudo partner. I'm starting this journey. Where am I wrong? Tell me.
How realistic is it, though? I mean, you know, it's impossible to get attention of VCs. Maybe you guys are completely different. But I mean, is that realistic? Call somebody and say, hey, I'd like to just get 30 minutes of advice from you.
Let me give you a comment. I disagree with the gentleman. VCs are extremely busy these days. These days, we're in a situation where the amount of information being created is doubling every few months. We're forced to just look at headlines. So the biggest mistake startups make, and you see it all the time, is they talk to an investor about their technology. That is absolutely irrelevant. We'll sort that out in diligence. We want to know, what problem are you solving? Why will people use your product or service? And you want to get the investor's imagination that says, okay, I get it. And then you do your due diligence on everything else.
Okay.
Just to your point, very quickly, sorry, Anshu.
No worries.
There are a couple of entrepreneur friends building enterprise seed companies, and they were asking, how do I reach out to Vinod Khosla? I said, just, here is his email. Send an email. You will get a response. One of the things founders, you asked about mistakes. Founders think this person is not approachable. You know, VCs want to also meet you as a founder at a very early stage.
When we did Barry Eggers, he said his general philosophy is better to be too early than too late. Right?
Yeah, remember we did an event where, thank you Raja for reminding, we hosted an event, UFOS Capital event. We brought in Barry Eggers as a keynote speaker. And Barry, we had tables set. He said, no, I'm not going to sit at the table. He just stood here and said, let's have a conversation. That's all, no slides, nothing. Right? He's a co-founder of Lightspeed Ventures, just for you guys to know, one of the 3 co-founders. And that's what he said. He said, my email is Eggers at etc. etc.
Yeah.
And please don't use AI to do the outreach for you. For heaven's sake, please don't.
So I actually think the founders have to be clear that they are raising money. So I disagree that they're coming to me for advice. I think they should get the advice beforehand they're pitching. But they have to have a clear story. So clear problem solution definition and not just go into the weeds of technology. So that's.
So do you think where they over-optimize the technology and to the detriment of what, when they over-optimize for the technology, what are they missing?
They are there's not much time left. Yeah. So they're not able to articulate their vision at a level that, as was pointed out, we are not the customer for the product. So explain what the product is. Of course, we are going to fund because you have something that you're building or you're built. But also be clear on how you're going to take it to market. So there are so many aspects. The CEO is not just a technical founder. The CEO is actually a business founder too. So explain, bring out that business aspect.
I know we're running short of time, but I just want to also get your input on what are some of the most common operational or hiring mistakes that you see startups making? Okay, you see that.
How much time do we have? No.
But the most common one.
Here's a very common one. Early stage non-technical founders, the first thing, and I don't know who tells them to do that, is they chase down a CTO co-founder. bad mistake. If you're building something as a non-technical founder, please team up with good software companies like Cordify and others out there. Get yourself a good technical person that can do software delivery for you. You don't need that CTO. You can do a fractional CTO if you need architectural advice. But I've seen so many times that a lot of CTOs out there want to come on your team just to say that they've got this title, and they're not going to do a single bit of work for you. So if you're a non-technical founder, that's one of the common mistakes I see. And then starting to hire operations. I mean, obviously depends on the type of company you're in, too soon, where you should be hiring more sales and marketing and not just only engineers. Somehow you need to make revenue. If you keep on hiring engineering staff, you're not going to start seeing revenues coming in.
I often have this conversation with my clients when I see them hiring. To me, I kind of put two people into two buckets. You've got builders and you've got scalers. And you've got to have builders at the early stage. And then when the time is right, you got to have scalers. And where I see companies really screwing up is they're hiring scalers where they really need builders, which I think is what you're saying. And so they're raising money, they're running out of runway because they're paying for scalers when they really just need builders.
Also, the other mistake is hiring people who have prior titles. If I am a CEO of an enterprise startup in sales area, oh, this person was VP of sales at Salesforce in the first 5 years. Okay, that's a great title, but is that relevant today? Are his connections, is his style of selling, is his understanding of the market relevant today? Like, I'll tell you a real example. We invested in a seed company without telling the name. And the CEO hires somebody, says, hey, this person did one of the first 10 contracts for VMware. I was like, what year must have that been, and how relevant is that in today's world? And is that relevant to even what you are building today? So hiring for titles, it really mostly doesn't work. You got to hire people who have that passion and understanding. And if it's a sales head, can he really make phone calls and get you the first few meetings? And obviously the product has to do the talking. But you need people who can actually execute. And there are some of the AI companies. If you look at the titles of the executives, even at Meta, forget the AI startups today. Even at Meta, some of the executives, look at their experience. It's actually fascinating how Mark Zuckerberg hired or promoted these people as well. You should study some of the executive team member bios. One of them is a high school dropout, right? And some of them just built products and did so well within Facebook and then Meta. So the titles don't really help. That's one of the mistakes in hiring.
Okay,
One thing I wanted to add. Sorry about that. Hiring definitely one mistake, but I see because I've done products, and entrepreneurs tend to overbuild product before they release to market. So don't make that mistake.
Okay, so Rob's been flashing the 1 minute sign for the last 15 minutes. But one more question, just one more question. If you could give founders one bit of advice to avoid failing in 2026, what would that be?
Don't create yet another Copilot startup.
How about you, Kate?
One piece of advice that I would give founders is that customers don't care about your pitch deck. They don't care about how much you raised in your seed round. They don't care about, if you're Forbes under 30 or anything like that. They care about if your product actually does what it's promised to do. Can you actually deliver? And at the end of the day, keep that in the forefront as you're building your company.
Well,
so I'll add a comment, and I've been looking at startups for 3 decades, and the two most important common traits of successful founders are, one, they never quit. They're persistent. They don't try and show off. They're kind of personal sacrifice of commitment. And the second one is as the world evolves, they have to evolve their strategy because the world is always evolving. Startup, and so I would say for you founders, be committed, work hard, give yourself to it. Don't expect people to come and give you stuff.
I think the basic principles, it's successful teams that make companies successful. So again, if you're looking at Gallup research of why teams and companies fail, the first one is a lack of a plan, a strategy, and strategies change very quickly now. And the second one is a lack of communications across cultural barriers. So be transparent in the team and build that into the culture, because as things shift, you will be able to as a team shift fast as well. And I mean, there's one story I want to share. Plan for business continuation. We had a case of one of our portfolio companies a year in the investment. One of the three co-founders died in a car crash. You can imagine at that stage of growth, it can be catastrophic. And thank heavens these three co-founders were very transparent in how they communicated, who was focusing on what, and if something happens with someone, who can take over that specific role. And good thing, because of that, they had to stand back because there were a lot of legal things that needed to be taken care of. But they came back, re-engaged with a lot of customers, pivoted to a better place, and quadrupled the revenues within the next 8 months.
Terry?
Yeah, just last thing to round off, I guess, stay grounded and stay realistic. I think within the current environment, everybody talks about, is there a bubble? What's happening? And of course, especially within the events of last year, for example, we see this massive growth in investment volume and investment activity, but how much of that is going towards the handful of couple names at the top? And I think that's always something that we need to be cognizant of. And yes, there are folks that are raising 9 digits, 10 digits on, not much more than a pitch deck and a stellar team behind them. But how easily achievable is that? And how realistic is that? And if that fails, if that moonshot fails, then we still have to, put our feet down and still build something that works. So I think within this market environment, that's always something to bear in mind.
Excellent. Well, thank you so much to the entire panel for, giving us such great feedback, candid insights. Really appreciate it. Thank you.
All right. Panelists, you exceeded expectations. You exceeded the time limit as well, but that's the moderator's fault, as usual. So normally we would have 30 minutes of audience Q&A. That was take our program to 8:50. Is that okay? Or do you have work-life balance issues, or can we go? You want more audience Q&A? Half an hour, is that okay? Is that okay? All right. First, how can audience members contact you? Paul? How can audience members contact you? By email, phone?
Mine's easy. Paul at k2x.capital. Or see me after, I'll give you my card.
Sanjit.
Yeah, my email is sanjit@ufirstcapital.com, SANJIT @FIRST capital.com. You can also send me a LinkedIn, but my LinkedIn is full. I created a second LinkedIn account, so do look for that. That has less connections.
Maria.
Yeah, I'll give you the easier email address, maria@thepienaar, THEPIENAAR.com. Otherwise, drop me a note when you connect on LinkedIn. Please just send me a brief message with context. Otherwise, I will ignore you.
Okay.
Just look for my name on LinkedIn. That's the easiest way. And don't get dissuaded if I'm slow in responding. There's just usually an onslaught of messages to get to.
Terry.
Yeah, I'd say LinkedIn is the easiest way. You can find me, Lamb Research, and happy to chat.
Anshu.
You can send me an email. My first name, Anshu, @converge.vc.
Roger. Well, Roger will be contacting you anyway. If you want to contact me, talk to Peter. So now it's time for audience Q&A. So if you have a question for our panel, step right up. We're going to have a line here. We'll take as many questions as possible. So who's got a question for our panel? Step right up. Alan, you have a question? Alan has a question. So this is not a pitch event, so do not deliver a pitch or thinly disguised pitch. If so, you have to deal with Peter, our bouncer. Peter. So Peter will make sure you don't deliver a pitch.
I'm definitely not pitching this, but we're talking about power.
You can ask for advice, though.
Oh, yeah. This is a bigger picture question, curiosity, because we were talking about infrastructure and power in 2026, like electrical power, not political. That's a different. I'm wondering if you're seeing trends or interest in the emergence of the fusion power, because that's been building so long. We're starting to see those reactors hold on for tenths of seconds, whole seconds. It's got a long way to go, but with all this pressure, the demand pressure, what do you see?
I got something. You know, I'm an older guy, and I remember like 40, 50 years ago visiting Princeton University Fusion Lab. And they said, it'll be 5 years. And it's, so I think until an industry is proven, it's not investable.
This is...
I see a lot of nuclear play popping up, but next generation nuclear technologies and micro nuclear generators, and yeah, there's other clean tech powers that I'm starting to see on the radar as well. But nuclear seems to be making clean nuclear come back.
So this is a really interesting topic. I will, of course, say I'm not a nuclear scientist myself. And, you know, even though we invest in deep tech, fusion is very far away from what's strategically relevant for us. But, you know, we always hear the joke, right, that fusion, people say that fusion's been 20 years away since the 1960s, right? And what's been particularly interesting regarding fusion, I think, in the last year or so is... I think the feeling that not only have startups been deploying more funding and raising more capital around the world, but there are these odd off cases of companies going to the public market. And, you know, I'm sure for many of us investors here, the jury is out on how much strategic synergy there is between Trump Media and TAE and things like that, for example, right? And these other companies, I think, was it General Fusion or which of the other ones that was doing this backlisting as well. But some of these companies that, you know, are still operating on this technology that is not yet proven on a scientific and engineering level, but even at that point, starting to venture towards liquidity in public markets. Now, is that a good sign? Is that a sign that they're very ambitious and optimistic that they're actually going to hit these technical milestones and achieve gain in their fusion reactors? Or are they hustling for the nearest liquidity that they can salvage, like the many SPACs of 2021, right? So, yeah, I'm not smart enough, unfortunately, to solve the technology, but it's a very interesting market dynamic to be observing right now, and massive amounts of capital that are really flowing into it, even with the, you know, new administration's crackdown on clean energy too. So interesting to see for sure.
I just had a question for all that are investing in AI. How many startups are solving the problem of autonomous agents going AWOL and, you know, spending and risk, you know, creating a lot of risk? Are there any companies like truly solving this issue around autonomous agents specifically?
So any agent company that's pitching to us, they say that their agents won't go rogue. So they may not be solving about it, but they say they have guardrails, they have mechanisms in place. So it's something that's kind of an expectation that they are taking care of it. That's why they include it in their pitch, because no enterprise will adopt them without the right guardrails. Okay, but the fact is they do go rogue. So I think that a solution, secure solution, is needed to make sure that the agents don't go rogue. They have the right authorization, they have the right authentication, they work for the duration I mean, we check human identity for everything, but these agents can take the human identity and do everything else also. So there is definitely a need, but nobody really pitches that their agents would do.
Well, I mean, and for me as well, I don't think everything needs an agent. And I think that's where a lot of companies go. I mean, there's still a very good play for embedded APIs and integrations. That hasn't gone away. Some of that might get some agentic workflows on top of that. But it's really how deterministic it can be. And it's important to look, but to building the security aspect as well. So that's also one thing when we're looking at some. I don't think we can say there's any single company that's popping up. I mean, if we see how fast just Claude Cowork and others are displacing other agentic platforms, it's a wild west out there at the moment.
When these autonomous agents make mistakes, who's responsible for the mistake, right? I mean, there needs to be some sort of authority over AI. Right now, AI is running the world, which it creates its own context, its own reasoning, its own goal, its own role, unless you give it authority, give it an identity, give it a purpose and an intent, or else it'll just make it up itself.
The one through whom the breach happens is the one legally that's held responsible.
Unfortunately, it's hard to really find out who that person is at the end of the day when it comes to building these agents. So they'll just eventually just say, oh, it's the AI's fault. But how credible is that when things are being regulated?
It is such a big issue. You ask a large enterprise this question, they don't know who to fire if something goes wrong. Okay, that's the whose throat to choke. Because if you were buying software from someone, then you can actually blame the software provider. But if you are building agent or you bought agent building technology and you're a developer cannot be held accountable for the things that are running in production that somebody else is making run because it's evolving. So it's one of the biggest challenges. I've asked like so many operators, big company operators, there is no throat to choke when something goes rogue.
What are some of the biggest concerns or red flags when evaluating AI native startups?
I'm actually looking for startups with 0 humans.
So this, what? My CEO and his.
No, why do you need human CEO? No, it's not needed. I don't believe it. So this is a real example, okay? Somebody in New York, somebody we've known, he said, I bought the IP of a bankrupt company. So I got hold of their formula. There were certain equations that they had built. The company went bankrupt for whatever reason. So I got that IP. I put it in front of Claude, Grok by XAI, and one more agent. And I said, hey, here is the IP. What can you build with it? And he says, I do a daily check-in. So I created a system. They can talk to each other. And I see the conversations happening. And one said, I can build a LinkedIn using these equations. It's a network kind of an equation, so I can build a LinkedIn. So they started experimenting with that, the agents. So we are actually creating on a serious note, right? It's not a joke. We on a serious note, we are creating an investment thesis around. This is an example only, but we are creating an investment thesis around a 0 human agentic AI startup. What does it look like? What can it do? What can it not do? What are the boundaries? What are the business models? So that's what agentic AI is for us.
Sorry, folks at the back, if you could keep the conversation
So
down.
Sanjit, it sounds like business is just a hallucination. Is that what you're saying?
Just want to ask the panel, what do you think about the future of build tech, particularly in technology and software, in order in order to handle the future of stick building has been around for over 200 years, and applying technology to that. What are the things that you're looking for, or do you not invest in those areas?
By build tech, you mean construction type company?
Residential, commercial, technology, software, anything else, applying AI to these
So-
technologies
Yeah.
in order to
So,
facilitate.
I actually, my first investment was in construction tech. When I moved from founder or operator role to investor role, I did construction tech, because I do believe these are the industries that are going to be the biggest beneficiary of AI disruption, and it's more the back office of the construction tech rather than construction itself. But I have seen a lot of construction type companies like punch lists, different activities of construction that happen. How do you convert the electrical blueprint into the number of into the components you need, and all that, all done by AI. So there is so much potential there, a lot of potential, and this is these are sleepy industries that haven't had the tech disrupt them, and it's actually happening. So I really believe these industries are going to be the biggest beneficiary.
I'm also starting to see some signals around different building materials, especially with all the insurance, fire risk, things like that. So there are a lot of materials, and then logistics and supply into localized manufacturing of materials for the build is some other areas that's becoming quite interesting.
In addition to, supply chain and back end, I think some of these interesting themes, another idea I think to definitely bear in mind for the future would be, robotics and automation for sure as well. And I think right now, some of the bottlenecks for that are having really more general purpose technologies that can, not only be able to operate in the field and be robust towards external disruptions and external, environmental complexities, and being able to balance itself, thinking about what even is the ideal form factor for robots, for instance. Is the human form really the most ideal form for actually deploying automation in the field in complex construction and work environments, for instance? And do we have the ability to, have flexibility and tune on the fly and still be able to replicate replicate tasks in an efficient and precise iterative manner? And I think that will be an really interesting trend to look to in the future.
Just added to what you say, Autodesk actually they dominate the construction industry, the software. Because I'm a 20-year consultant to a electrical plumbing company who are they have the IKEA account, so they use a lot of Autodesk software. But I think everybody was too worried about the SaaS services kind of, because I think actually this is time for them to make a lot of money, because before then you have so many peoples, and they're gonna change their pricing because everybody was talking about the domain knowledges. Domain knowledge is what they have, because they have the domain knowledge to make things work in the real world. And right now they're gonna reduce their effort. Doesn't matter is the agent who asking for the services for the people. They still have to get things done, right? So what happened is they're using a lot of agent. Doesn't matter how many. If you use so many of my process, I'll charge you. So the pricing pattern will be changed. And not only that, because they have a domain knowledge, so they have a lot of data in terms of Salesforce. I think it's a time to buy the Salesforce stock, because it's going to be very profitable, because they don't need so many services and so many people to serve the process. But they can charge by different kind of pricing model. And a lot of things like that, intuitive, right? They have a tech software. Do you think how many people have the knowledge to have this kind of domain knowledge? It takes a lot of time, because I'm a CPA. So I know it's not what do you think is so bad? Okay. No, I'm saying I was making a comment on everybody was too feel about that.
Well, where's Rob at? First of all, I'd like to thank Rob for nearly giving me a heart attack, telling me to ask a question up here. I'm a nervous wreck. My name is John Strong. I'm with Strong Solutions. I'm up in Kodiak, Alaska. I'm a rural RURAL healthcare provider in remote Kodiak Island. So I'm here looking for solutions. We finally got a hold of some money with this rural health transformation program. Alaska's got some finances to actually help us with what we do with healthcare. So I'm here to get advice from you guys. This is a problem between me and my patients. I want to get it out of the way. And I want to find smart people here in Palo Alto to help me to do it. What's your advice to me and how I kind of vet the people to find these solutions?
You want to find people who eliminate the device between you and them?
So here's the thing. I'm a provider. I love the people. I'm a human person. There's software people. There's hardware people. I'm a flesh person. I'm a human person. I don't want the tech to be in the way when I'm giving healthcare to your mother, to your grandmother, to your autistic son in my group home or in the community. I want it out of the way. There's two pain points for me as a provider. Number one, the regulatory stuff. All the stuff I have to follow so I don't get in trouble, so I can keep operating, keep providing your grandmother healthcare, okay? Big pain point. Number two, all the documentation that I need to do so I get paid and I can pay my staff and keep the lights on so I could provide healthcare in rural environments for your grandmother. I need these pain points out of my way. That's kind of why I'm here.
Yeah, use AI as your helper. There are companies coming up. I mean, look at a company called Hippocratic AI. They are Series C plus company. Then there's Open Evidence that has done very well in your field, right? And there are several other companies. These companies are actually solving some of these logistical and administrative and regulatory pain points for you, so you can actually focus on the patient.
Yes. That's what I need. That's what I
how
need.
the more you adopt some of those AI solutions, upcoming AI solutions, the easier your life will be and the friction will go down, and then you can focus on the patient.
Yeah, and I mean, if you do scouting, like any large company would do scouting, AI is a pretty good way to say, I'm looking for these type of companies, which startups or others are out there that I should talk to. You'll likely will see a lot of very interesting companies coming up. So that when it's just general scouting for solutions is a good way to go and start, and then have the conversations and attend more pitch events. There's tons of them also virtually, so you'll meet the founders.
Thank you.
Sorry about that. Hello, everyone. There's two questions, really simple. Number one, how do you guys look at quantum computing in the industry, and how do you guys define, because I feel like quantum computing is still far away, but then I saw a lot of VC has been, putting money on the table. So how do you guys look at the quantum computing opportunities?
It's closer than fusion.
I do agree. Actually, you look at the recent developments by Google.
Yeah.
Google, IBM, and Microsoft.
Yes.
Actually, it's much closer than most people think. The part I worry about is quantum computing a good fit for startups?
Yes.
Some of them have gone Rigetti Computing and others have gone public. And there are some very good startups that have done well over the years, but they have not made it to the mainstream of quantum computing sector. And that is my worry.
Yeah, the one part that's a bit closer than the quantum computers or the quantum security software. So yeah, they are earlier trends.
Yeah, great.
Let me add a quick comment.
Yes.
There are technologies being developed in the security space which don't require passwords. So there's nothing to hack. So in other words, as those technologies succeed, the value of quantum computing won't be quite as valuable for cracking codes because there won't be anything to crack.
Yes. Good.
So for us at Lamb, we have not yet made an investment into quantum, but it's definitely a critical technology that's very much on the radar. Number one, of course, from our perspective as a strategic investor and as investors, we want to invest in innovative startups. And number two, at the corporate level, of course, is thinking about number one, how do we potentially leverage quantum computing to address many of our own problems?
Yeah.
Now, as a material science, chemical science, and physical machinery company, there are many potential applications for that when it comes to molecular simulation, for example. And then a third point on following that is how might this either challenge our existing business or create new business opportunities for a company like us in the future when quantum really is achieved? And how will the core hardware technology stack of modern electronics be transformed? And since we are a company that sits at the foundation of that, how might we want to tailor our future strategy towards that? I think it's definitely a very interesting question. There's many different approaches towards quantum technology right now. I would say all of them currently have their pros and cons in terms of viability, and there are many fundamental scientific challenges around it as well, whether that's the cryogenic temperatures, or we mentioned power consumption earlier, for example. But yeah, definitely very interesting to keep an eye out on, and many very, very successful startups that are coming out with great research.
Great. Awesome.
With seed for technical founders for pitching, what is the biggest mistakes you see, as well as with scaling companies past seed with technical founders? What are the biggest pitfalls?
Too much product, but focus on the tech and the product. That's the biggest mistake we see. Is we really want to see the opportunity and how you leverage your expertise and domain expertise, and how you're going to build the traction with the customers. So just comes back to don't talk too much about the tech. Obviously, unless you deep science or life science where you need to show the science, don't spend too much time on tech and product when you pitch.
So yeah, that's true. It's just don't spend all your time in tech, explaining the tech. There has to be other aspects of the business that especially the CEO founder needs to address. The other mistake, as I had mentioned, I see is, especially after the product, they keep on building the product. Tech founders, especially, they keep on building the product, and they're not taking it to market. And it's better to take it to the market, get the feedback, iterate on that, and technical founders don't do that. The last mistake I see is the founder CEO is the number one salesperson, and they hire a salesperson to sell the product. That's a mistake.
So I'll put it a bit simply. You want to be able to describe what the product is or service, describe who the customers might be, and then you want to describe why will they buy your product or use your service. In other words, what's problem are you solving that's going to make the world better? The technology will be sorted out in due diligence. Don't focus on technology, focus on the opportunity.
I'll add on to that because one of my irritations that I always see founders focus on is the TAM, SAM, SOM. Great, you've done your homework, but what's the story behind that? Where are you going to take the business? How are you going to grow this? What's the traction that you already have? That's important. And who's going to pay for this in the future are questions that they don't focus on enough. And I wish founders did.
Hi, so really quick question. As a student who's studying AI analysis and finance, the only capital that I have right now is time. So to be prepared, what finance field using AI do you think is going to be the most thriving in the future, according to you guys?
Stablecoin infrastructure, of course. No, there's a lot of development on the financial services industries, investments, areas of where a lot of quants are being used in the banking industry, different models. Digital assets, asset management, that's where we see a lot more focus as well. But stablecoin, obviously, all these agents, if they're going to transact, they're going to need some form of payment rails using stablecoin infrastructure. So I would say the intersection of that and traditional lending and banking is pretty good space. Insurance will come later. It's still an industry that needs disruption.
Yes, great. Well, thank you again to the panelists, and thank you there.
So now it's what you've all been waiting for. It's the raffle. So your chances look pretty good. I think we have like a dozen prizes. So if you want to enter, here's your last chance. Going once, going twice. Hurry up, enter. Well, let's go with the first prize. So here we have the classic Steve Jobs by Walter Isaacson. Roger, you want to do the honors? The form's over there, fill it out. Yeah, here, that's okay. Here, just put your name on it.
Yeah, we got 2 guys.
And the winner is nobody.
Emil Mizanov?
Emil, come on down. There you go. Hey, you want a picture with Roger? Yeah, he wants a picture with Roger. All right. Anshu, you're up. Hey, hurry up, don't there.
Sure, where you be staying? Yeah.
Main Startup by Eric Rees. The winner is
Jimera Ortiz.
Amanda. It's Amanda. J is pronounced. Amanda, come on down. Amanda always wins something. Here, you want to pose?
That's all I know that. No, what's with it?
Just
now be extras.
All right, congratulations. All right, so let's keep it moving along. Actually, Cruz, you want to mention your prize? You want to talk about your prize? Cruz, what's the prize?
Free rides. So it'll be your first opportunity to ride with somebody else really cool, and maybe it'll be somebody else from this room. Let's see who it is.
All right, Terry, there is.
Nicole Jackson.
Nicole Jackson. In the room?
Oh, no? No,
Sold. Next person.
Get to pull another one. Maria Berlacchi.
Maria Berlacchi. In the back there? Yeah? Is that you? All right, come on down.
Maria, come on
winner.
down. How many do you have? Just 3.
Yeah.
All right, next one, King. It's another free ride from Cruz. Winner is.
Okay. So you just sign up for it and just let me know.
Look at that, I won. No, I'm just kidding. Ledufin Noyland. I'm probably butchering that name.
All right, winner number 2. And there should be a third one of these. Oh, there it is. Great. Should we do a picture?
All right, Maria, the winner is.
There we go. Oh gosh. Jameen Ortiz.
That's Amanda. Amanda entered twice, but you've been shamed, but you can have one anyway. Give it to her anyway. What the hell?
Twice.
So apparently it's 2 entries per person, according to Amanda. How about this? Tesla's giving away a free week with a Tesla. Pretty good. Who would like to win this? You get to ride a Tesla for 1 week. Not bad, huh? Winner is, drum roll.
Ajay Mishra. Ajay Mishra.
Right. It is Tesla. Here, why don't you talk to Tesla in the back and get a picture with it? Oh.
Oh, one second. Sanjit. You are using this pero 6%.
But you can go talk to the folks from Tesla in the back. Yeah, they'll give you a bonus maybe. All of Startup House, Azamat, you want to talk about your prize? So Startup House is actually a few miles from here, so if you need a place to stay, maybe not tonight, but okay, the winner is Paul. You want to do the honors? Drum roll, please. Winner is
Donald Trump. No, actually, Samara Oe.
it's Jimena. Jimena Ortiz, come on down. So, well, maybe
You
there's a
should just
lesson.
stay here.
Maybe the lesson here is, what's it? Move fast and break things. Is that true? There you go. You can say it. You can say at Startup House. Yeah. All right. So let's go back to Roger. Another Startup House certificate. We're getting some good stuff. Don't worry. The winner is
Christine Ann Iglesias.
Christine. Did Christine go home? Oh, she went home. Sorry.
All right. Sienna.
Sienna. Wow. So a Startup House. Is that like one name?
United or Startup House in March.
It's one name, just like Madonna or Beyonce. Sure. Oh, you want a picture with Roger? Sure.
All right. Okay. Thank you.
All right, we have some good stuff here. You want to talk about your prize?
Yeah, sure.
Is that it?
Yeah. This is from our e-commerce partner, Idara. This is a laser smart tape measure 2-in-1. So, well, it's a tape measure, but at the same time, like you see this laser pointer on the wall. Like when I push the button, it's going to tell me now that's 14 feet and 3 inches away.
And winner is, drum roll,
Jatin Ulal.
Jathan, come on down.
Enjoy.
So now we're getting some good stuff here. A $25 Visa card. So someone's going to get funded tonight to the tune of $25. The winner is Terry.
Jimena Ortiz.
All I can say is you got, so congratulations to Jimena. Jimena's a real winner. That's a customary thing, but she broke all custom.
You know what happens when you let AI do whatever?
How about this? Super Lotto.
AI takes all the rewards.
Super Lotto. Someone's going to win the big prize. Winner is
Stephanie Bloom or
This is what happens when you don't
Stephanie,
put
come on down.
guardrails.
She's the last name.
It's when the agents
Stephanie,
go rogue, right?
come on down.
Agents gone wild.
You won a lottery ticket. A quick Super Lotto for this Saturday. Yeah, serious. I bought it myself. All right, good luck.
I get 10% if you win.
He's on a picture with King. That's why he's called King. Well, MD. Well made. So well made. What's your prize? Oh,
So since this is Year of the Horse, we have a little bit of seed money here. And also, we're also offering a $1,000 discount on one of our ADU products.
whereas
Le Dauphin Noëline.
City.
Noël.
Little thin Noeline. Menlo College. Come on down. Come. Here you go. Human longevity. What's the prize, Colin?
So our prize at Human Longevity is $1,000 off one of our health screenings and also my business card.
And the winner is guess who it is? Jimena Ortiz.
Walk out of here at $10,000 for the.
No guardrails were put in this design.
All I can say is you got some.
That's an entrepreneur I want to invest in.
Neural methods. What's your prize?
How many are there? All in your.
Paul, you get to do the grand finale.
So my prize is the 2026.
Prize is the 2026 Neural Method Report.
Vladimir, no. Gordon. Is that Gordon? Yeah.
I think you're misreading here. Gotta be Jimena.
Sandor, Sarlor.
Sandor, Solo.
Here's to Operation Managers. So.
Sandor.
All right, so let's give it up for our panel once again. Let's give it up for Roger, our awesome moderator. Let's give it up for our sponsors and our event team and our video team.
Hey, Rob, there's a
Let's
ticket.
give it up for our audience.
Rob, is this?
Oh, we'll skip it.
Oh, yeah.
You can have it. So, as I mentioned, it's our 16th anniversary, but who's mentioned that they had a birthday in January, February, or March? Come on down. Alan, what's your birthday?
February 3rd. February.
It's February 2nd. You want to come on out? Come on down if it's your birthday in January, February, or March. All right, on three. 1, 2, 3. Happy birthday to you.
Alan, happy birthday to you. And so.
All right, so as I mentioned, there's an after party. So if this were any other law firm, you'd have to leave in 20 minutes, but you can stay all night. We're going to have some cake, other desserts. So stick around, ask advice of our panelists. Thanks for coming.